contagion might actually be here. Banking disaster is finally happening. It was just about a few days ago that we're talking about Silicon Valley Bank, we're talking about Signature Bank, and now there's so many different things that's going on because the banking stocks are actually trading like meme stocks. Back in the 2020s, back in the pandemic era where we were trading AMC and GameStop. Bank stocks are trading like meme stocks. Do you have any idea how crazy that sounds? It is actually ridiculous because you see First Republic going up 50%, going down 40%, going up 30%. Absolutely crazy. You would not even believe that that is a bank stock. But today, Credit Suisse decide to make this hole even deeper. Credit Suisse actually came out and wanted to get more funds. Hopefully, getting it from their largest shareholder. And their largest shareholder actually said, no, we're not giving you any more funds. Okay, and there are actually multiple reasons for that. All right, and I think the biggest reason of them all is because the largest shareholder is already holding 10% of Credit Suisse. And for people who are actually who understands this whole entire thing is that if you have more than 10% of a certain share in a company, that means that there's going to be a lot more regulation for you. And for the largest shareholder, they were like, hey, not me, I'm not doing this, okay? So they do not want scrutiny from the European banks, they don't want scrutiny from the Swiss banks and things like that. So they're like, you know what, I don't want it. You want money, you get it from someone else. So of course Credit Suisse thought, okay, you know what, let's go to the Swiss bank. And hopefully, as of now, the Swiss bank have still yet to give them any more money. But it's okay, because while this thing is slowly imploding, while it is still cooking on this side, we go to First Republic. First Republic is a regional bank as well. And like I said in the intro, it was trading 50% down, 40% up, 40% down, 20% up. It's absolutely crazy, okay? Right now it's down 20%. Oh, big whoops, it's just down 20%. Let's be honest, it could be down 50%. So it's not even that bad. But you have to understand that right now, JPM, Morgan Stanley, all those big banks out there are trying to save First Republic Bank. So this kind of bring up this whole new picture is that are regional banks actually at risk at the moment? Because what we actually thought about the Silicon Valley Bank and what we thought about Signature Bank was that, maybe it was because of a bank run, maybe it was because of a few bad bets, right? But right now, this is even worse because it means that we actually need a lot of liquidity injection into the banks themselves. And this actually creates a huge disaster because people are going to lose faith in the whole entire banking industry as a whole. It's not gonna just be a regional bank issue. Let's be honest here, okay? This is gonna be a banking situation as a whole. JP Morgan is gonna be losing trust from a lot of their clients. Morgan Stanley is gonna be losing trust from a lot of their clients. Okay, so will Bank of America, Wells Fargo, Charles Schwab's, doesn't matter. All of them are gonna be losing a lot of clients. Okay, and the reason why they're losing a lot of clients is because people are not going to be putting their money investing with those banks anymore. They're going to be going, you know what, we're going to do it safe. We're going to do credit default swap. Okay, we're going to do bonds. We're gonna do safer fixed deposits. We're gonna do, like zero risk bullshit out there. We're not gonna be doing high risk things with the banks anymore because previously where the banks actually get the big checks. Okay, where all those money manager, investment manager, where they get the big checks is from investing. Okay, let's be honest. They're gonna be giving them $1 million, $5 billion or whatnot, and then they're gonna be like, you know what? Well, I'm gonna get you 8%. Okay, I'm gonna get you 8%. I'm gonna get 12% in this market, and I'm gonna get 1% from that fat check. That's what they're supposed to do. But all those people right now are so worried that they're not gonna be passing the money to you anymore. They're gonna be parking it in gold for all I care. Okay, and this means lesser commission for the banks. And when banks get lesser commission, it means that the bank is not going to have a good quarter. And we all know what a missed quarter is going to look like. Red in the market. So this is the whole entire thing while it's still brewing. We have to look at Credit Suisse all over again. What is Credit Suisse going to do? Credit Suisse, high chances they're going to be getting the liquidity injection from the Swiss bank. But it still poses the same problem. Are they actually getting bailed out? And is that actually a good thing? Because I think it's quite fair for us to actually say getting bailed out have its good and its bad. The good part of getting a bailout is that all those depositors, they by right should not hold any risk. Albeit they are supposed to only get up to a 250,000 FDIC insured, okay? But of course in 2023, the FDIC insured is apparently unlimited money, so who cares, okay? But the good thing is that depositors are now insured. That's the good thing about a bailout. But the bad thing about the bailout, even for Silicon Bank, even for Signature Bank, for First Republic, for even Credit Suisse, all of them, getting a bailout is not going to be a good thing because all these CEO, all these fund manager, investment manager, managers in general, they're going to be risking a lot more in the future because who cares? Money is literally just a number. It's not anything. It's a social construct at this point. We can just be as risky as we can, get 100%, go get that check. That's what all the money managers are going to be doing from here on out because we're going to get bailed out anyway. Okay, especially those CEOs because they're gonna be like, all right, you know what? Someone just go be as risky as you can. Okay, you get 200% returns, and if you get fired, you get fired, but I'll still give you a fat bonus before you go, and that's gonna be the case. So I think this whole entire thing is probably still boiling. I think it's still boiling, and that's the thing. If it's still boiling, are you sure that we should be getting, mad increases in the market? I don't think so. The Qs and the SPY is like raging upwards, and I sincerely don't think that should be the case. But of course, I think that it could be a confirmation bias on my end, where because I am bearish on the market and I don't want to see the market go up. But I believe that my own opinion about how the market shouldn't be jutting upwards in this sort of market, I think it is well placed. I don't think that the market is supposed to be rallying. Even though JP Morgan and Morgan Stanley and whatnot, they're trying to save and rescue First Republic, I don't think that's going to be a good thing. Like, if you require rescuing, how can you rally the market? I don't get it. But hey, the Qs are up 2% today. So I guess, if you are bullish, you did win the day. But let's be honest here, the recession is right around the corner. I don't know. Just be careful. I think that this is going to be a huge contingent. We're probably going to see a huge disaster moving in the next few months to come. Recession is starting to look a lot closer than we think. So yeah, that's all for this video. Thank you so much for watching, and I'll see you guys in the next one.